All right, guys, welcome back. Let's get right into the stock charts. In this video, we're going to cover the tech stocks. That's where the weakness is at, and we're going to cover the market breaking down. And this is kind of doing what I was expecting it to do. So go back and watch the last few videos. I kept saying that. That's why the thumbnails on my last few videos have been about tech stocks and tech breaking. And just, the concept of when tech breaks, the market breaks. And tech has not fully broken down its uptrend, but it is breaking down. So let's get into that. And we really want to watch for that kind of stuff, because when tech breaks, the market will break. It doesn't matter about any of the other stocks. The market weighting of the five FANG stocks is so high that the rest of the market can't continue to move higher if the FANG stocks aren't moving up with it. And they have been the leaders on the upside, and it looks like they're potentially going to be the leaders on the downside. So we're going to go ahead and get right into this. We'll start off with triple Qs. All right, so look, here's what we had. So I'd been playing around with this flag a little bit yesterday. I had it, as the data points kept coming in, I kind of adjusted it. And this is where I ended up at the end of the day. I ended up with a flag that looks like this. And, that's the flag that we ended up having. And then this morning, I saw that we were gapping down out of the flag. And that's an impulsive move. Gaps are impulsive. They trap money. So you can see you had the gap down right here. And so as soon as I saw the gap down this morning, I knew that we were most likely going to continue to the downside. And looks like that's what we're getting. They tried the first hour, there was some shake and bake happening up and down and kind of shaking people out. But ultimately, we just still hung out below the flag. And when the hour candle closed below the flag, then, that's pretty much all she wrote. So look for this to continue. A little bit of support probably right here. This might be all we get today, 255.50. We'll have to wait and see. But ultimately, it looks like we're heading down to this 250, 251 range. It might be about 251 by the time it gets there. Now, that is the longer term support that's been part of this entire rally that we've been in. And that's the longer term support. So that's where the dip buyers, you'd expect them to step in and buy. So I do expect we get some sort of a reaction there. Maybe we bounce up, have a kick, bounce up and, have a pop off that 251. But, the thing is that we're coming from way up here. And if the momentum is strong to the downside, yeah, we might get the little bounce, but that might fail. And ultimately we break this support. Hasn't happened yet, but just something to watch for. Because, ultimately this support line will break at some point in time. Now, if this breaks, then most likely the S&P 500 is going to, not be able to hold up either. So let's look at the S&P 500. Then we'll look at some individual FANG stocks. So here's the S&P 500. They're just chopping it around up in this area is what they're doing. And this still is the island reversal top. So it really hasn't been negated yet. I mean, it's hanging in there. It's, they've tried to knock it out twice. So here's the first attempt where they popped it up and shook out any shorts, and then it failed, and then they popped it right back up. And that's, that looked really bullish at that time. That was something that when I saw that, I was like, well, they shouldn't be back up here again, but they are. So definitely looked bullish. But they weren't really able to go much beyond the top of this range, right up here around 322.40, 320, somewhere right in here. So, and we're selling off again. So we're still chopping around. We haven't broken down below this it's the bottom of the gap right here from the island top. So, but a breakdown there, if we break down, I would expect that is going to set in motion the next trend. Okay, so a break back down into this gap should set in motion the next trend, because this would be the reversal pattern, the island cluster top reversal. We would have had the back test, two good solid back tests that would have shaken out any shorts. And then if you start to move lower, then all the damage has been done, I guess. Everybody's been shooken out of their short if they were a weak hand, and and that's what that will look like. So If this breaks down, I do expect that this will be the start of the next trend, which will be to the downside. Now, how far that trend goes, we don't know. We'll just have to continue to watch the trend and wait for signs that the trend is going to end. But it does look like we are getting close to potentially starting the next trend. We just need to see a little bit more damage done. So what I'd want to see is a breakdown below this 319 level. It's about 319. And then the Qs needs to probably do some damage too. And ideally you want to see this longer term support go in the Qs before you can confirm that the next downtrend has started. Tech's got to break. If you're going to have weakness in the S&P 500 or the SPY, then tech has to break, and you'll need to see the Qs breaking down as well. But if you look at the individual stocks, so we'll go through some of these FANG stocks here, and we can kind of take a look at what's going on. So here's Apple, still bullish. I mean, in general, longer. It's the same as the Qs. You're still in an uptrend. The trend has not been broken. We're just getting a nice pullback back to support. So here's Apple, kind of did this little funky flag thing, and then we broke to the downside today. So we should continue down and hit the support down around 381, and then we'll see where that ends. Maybe that's all we get. That's probably all we're going to get for today, unless there's some sort of news catalyst that comes out, and then we watch and wait for either a gap down or something. I continue to say that because this uptrend's been so prominent, I don't think you're going to get an opportunity to just exit this when this breaks the trend. I think it's going to come in the form of a gap down, and it's going to trap a lot of that bullish money. So I continue to think that that's usually how it works when they break such a easily cited uptrend. They usually do it with a gap down. So, anyways, that's Apple, still bullish long term. Or, well, still bullish in the intermediate term, in this trend right here. This is your trend right here. And actually, Apple is still bullish longer term as well. So we wait for the breakdown there. Here's Microsoft. Now, this is interesting. This one has started to break down. I've been playing with the trend lines here, trying to make a different trend line. And really, this is the cleanest one I can come up with. I mean, yeah, I can kind of make this one here. This is all right. If you wanted to, mark it out as a shorter term trend line, you could mark that. We could say that's one. I'll leave that up there. But this longer one where we've got coming off the lows in March, I had a reaction here, and then as you can see right here, we were just walking that trend line right here, and then we gap below it. So that validates that traders were at least watching that, and sure enough, selling off. And looks like we're picking up some steam too. So starting to sell off some more. So that looks like it's going to, we'll see where this closes. Maybe they want to pop it up and close it right here. But ultimately, I think we've broken some trend lines here on Microsoft. And Microsoft's a big player in the, in the tech stocks in the triple Qs. So if Microsoft, it's kind of like knocking down dominoes. We knock down Microsoft, that's one. The rest start falling, and then the market falls. So that's basically how it goes. Because you have to remember, the recent rally narrowed down to just the FANG stocks for the most part. I mean, yeah, you've got the Teslas and you've got these stay-at-home stocks. They don't have any market cap. They don't make a difference. They're just sideshows basically. This is the main event here, and basically, if Microsoft fails and these FANGs start to fail, then that was the leadership in the rally, and the rally will end, essentially, is what I'm saying. So Microsoft looks weak, looks like it's breaking down. Amazon looked weak. You could see the relative weakness yesterday, as I pointed that out. So Amazon was down 2.5% yesterday when the market was up slightly, and that's relative weakness, of course. And we're continuing today. So nice impulsive continuation, with a gap down and continuing to sell. So that looks, there is a gap right here. We're probably going to gap fill, and then that might be it for Amazon until we get maybe some sort of a little pop. But ultimately, you've got the longer term support line right down here. 4 reactions along that support line. That falls around 2840, depending on when we get there. And how far down is that from here? Yeah, it's about 3.5% roughly. And then that's where Amazon should find support. So we'll watch that. And I'm getting some alerts firing off. Was looking at this COF, Capital One financials. The banks are rallying slightly, but and that's what I said in the past. The XLF, I said in the past videos, I said, look, if they're going to do any kind of repair job, it's going to be right here in the XLF, and that's exactly what happened. This is what they're trying to patch up. When I say they, I mean the market makers. I mean the big funds, the big money that have a vested interest in the market continuing to rally. A lot of the fees generated from these big players on Wall Street are generated on the buy side or the long side, 401k flows. There's all kinds of fees that are generated. And when markets sell off, people panic, they panic sell, they sell money. And these brokers and these big funds and these big money flows don't get paid just to hold cash. They get paid to invest cash, and that's how they generate their fees. So the institution's set up to, encourage the rally, to save the rally, all of the above. And that's why when you get the big sell-offs, they're usually massive, because everyone's on the long end, everyone's on the buy side, and ultimately that creates the lopsided trading and the lopsided market, and then it flushes to the other side and everybody panic sells. It's kind of how it plays out. So but anyways, COF, let's look at this one here. This one, I didn't take it because I didn't spot it till yesterday, basically, but this had a bullish falling wedge, and we broke out right here. As your breakout, positive divergence in the PPO and the RSI, signaling a trend change was imminent right in here. And then we broke out. Looks like this candle right here was kind of a back test. They stepped in early and bought it, and it's running higher. So this one, I think we run up to, and I kind of marked out these lines thinking how it might go, but this one is should run up to about 64.75, and then sell off from there. That might be it. We'll have to wait and see. Nothing to really trade on this one right now. It's just not a good entry. You need to wait, but I'll keep an eye on it. And Google, I don't look at this one too much because for the most part, Apple and Microsoft are usually easier to chart, and they're heavily weighted enough that they can pretty much dictate the tech sector. But as we're looking through the things, let's look at what we got here in Google. And what I haven't charted this one yet, but what I spot instantly is a potential head and shoulders pattern. So here's your shoulders, here's your head, here's your shoulder. Looks very clean, nice clean pattern there. And your neckline is, just to give it the benefit of the doubt, we'll call it about right there. And we're almost there, breaking down. So, if we break below this 1480, it's about 1485. We break below that impulsively, then that is a successful head and shoulders topping pattern. And that sets this up for a move to the downside. And so, yeah, we're going to have to watch that. I don't see too many more support lines there. We draw it out from the bottom down here. See if I can't mark this out. Yeah, see, there's just nothing really clean to mark out the uptrend. You had an uptrend that was right in here, and we broke that. We broke that right in here, and then it went sideways, moved up a little higher. But this looks like a topping pattern right there. So if that breaks, that neckline breaks, then, that's just another nail in the coffin for the FANG stocks. And then Facebook, Facebook just doesn't have the weight. I mean, we've kind of covered these. I can look at it. Let me pop it up real quick. I don't like charting Facebook either. It's a lot like marking Tesla. It's just erratic most of the times. I don't. Let's see here. Yeah, Facebook's a lot like Google. I don't see anything there's your uptrend line that existed from the past, right there. It's right about there. Not see, like I said, Facebook doesn't chart that cleanly, so I usually just look at the others. So that's what we got there in the tech stocks. Let's look at XLK, which is tech minus Amazon. So again, you still have an uptrend. We're coming back down to it. You need to see this break. If this breaks, then the market will break. And that's basically what it comes down to. And this could be adjusted slightly here and there, say that we've maybe undercut it a couple times. But basically, benefit of the doubt, we need to see this like 105 break. And then, there's probably a horizontal support, right? Yeah, it looks like there is. Yeah, right about there. Yeah. I'll have to do a little more homework on this one just to spot it. But yeah, it looks like this is coming down. Tech's coming down. So let's watch this. If this weakness persists, the market will not continue going up. And it's simple as that. All right, guys, thank you for following along, and I'll catch you on the next one.